Hello, Speaker Forex. This is Gregory. It's currently 11 p.m. Pacific Standard Time, June 6th, 2012. Actually, it's June 7th everywhere else in the world. Now, after the major gain on Friday, I'm looking at the gold USD right now. And with the major gain on gold on Friday, we've been in a relatively small trading range for the majority of the week. And yesterday, we actually broke through the channel, and it seemed like we were going to make some headway, but the market reversed and came back and took out the previous resistance that turned into support, and now we're at this level again. So I was actually trying to get this this video up and going a little bit earlier, but I'm actually a little bit late, but still you should be able to see this in time and actually see how this trade can pan out. Now currently we're trading at 16.2150. If you can probably get a better entry. Actually, this is probably a safe entry as well. But the only thing that I'm concerned about is potential volatility, and you may have to adjust your stops accordingly, probably above this bar, depending on how wide you want to, how much you want to risk on your trade. Now, the upside of this trade is actually right down here. See, on Friday when we broke this last resistance area, which is at 16.0150, that would be a great target for us to go after as the market reverses, because of course we're going to encounter this traffic here, but this traffic is so close, eventually it has to break beyond that, and the market has already demonstrated with this false breakout, reversed, took out the previous low, the retest and failure. So right now we have a great opportunity for a low risk trade. Now, if you're in America, you may want to just place a trade before you go to sleep, because more likely than not, the market is not going to move until the early morning when the unemployment data comes out. So if you place a trade now, you may want to place it with a wider stop. If you want to wait until the news, just make sure that you understand that you may encounter some slippage along the way. So there's risk involved either way in this trade. So what I'm thinking about doing is actually getting in around 16.2350 if the market can actually come back that high and retest, and I'll sell on a touch there. I already missed my opportunity, but I'm going to try to wait until this comes back and maybe retest or go to a smaller time frame to see if I can fine tune my entry, because I don't want my stop to be too wide. But as you can see, I already have drawn on my screen that this is a potential profit of over 200 pips. So you can probably risk as much as 100 pips. You could probably go a lot less than that, depending on what your comfort level is. You can probably, depends on your entry, if you can get in, let's say even somewhere around there. I don't know if the market will go that high, but let's say we do something like this, which is around 80 pips. So 80, risking 80 to make over 200. That's about 2.5 to 1, a little bit less than that. So this is definitely a plus EV trade setup. You're definitely risking less to make more in this trade, and more times than not, you will actually be able to profit from this trade in the long run. So hopefully this trade is actually very beneficial for you. You can actually see this if you look at the 4-hour chart. You can see how everything is developing on a 4-hour chart. It's a lot clearer and more concise. If you go down to the daily, you can see that this particular level is very, very significant. So we do have a confluence with the trend line. We also have confluence with this previous support area. We have a rejection there. So all these things are lining up in our favor for a nice target to the downside. So definitely take a look at this and see if you can benefit from it. It should be easy 200 pips. The only thing you have to do is just fade the initial volatility early in the morning, and you just should be on your way. So thanks for tuning in. This is Gregory here, and until next time, green trades.